Ladies and gentlemen, it's your boy Ryan Dins, broadcasting from guess where? Cabo San Lucas. And I'm sitting in this wonderful hotel right now, but I don't stop working. There's no such thing as a vacation for me. I'm always trying to improve my life and always trying to get that money. So on this episode, we're going to talk about a stock that will help improve your life if you're interested. And this stock is called Kraft Heinz. But before I get into it, make sure you hit that like and subscribe button so you can get these knowledge bombs every week. And let's go! Woo! Kraft Heinz is a very popular stock with a lot of hedge funds. Warren Buffett loves it. It's one of his top positions. It had an IPO a few years ago and just has been taking a whooping ever since. If you look at the chart, it is just straight down. However, it has recently turned around, and I believe that it has a lot of room to grow. Right now, it's around $41. And it has a PE ratio of 5.1, which is very, very, very low. I say to look at stocks with a PE ratio between 10 and 20. Sometimes if it's a high growth stock, maybe a little bit higher, but at 5, it basically means that it is very highly undervalued. You know, it has a good dividend yield of 3.6%. Warren Buffett has not been selling it, holding strong. And if you think about it, it's a big time consumer staple. Who doesn't use a Kraft Heinz product? I mean, everybody uses ketchup. The longer things go, ketchup's gonna reach further places in the world. They have lots of plans for growth, and it's just a big company. And I believe that this company is gonna continue to grow. It was a little bit better deal when it was below 40. You know, even when it was in the low 30s, that's when I bought most of mine. So I'm up around 30% on this, which is very nice for me. I'm gonna continue to collect these dividends. I'm not gonna sell it right now because I still think it has room to grow. And while I'm waiting for it to grow, I'm going to continue to get these dividend yields, and they're going to continue to grow their dividend each year because they've been doing that for a while, and I don't think they're going to stop anytime soon. So it's not investment advice. Make sure you do your own research, but this is a pretty safe call. Some of the other calls I make on my channel might have a little bit more risk. I don't see this as a huge risk unless people stop using ketchup. If they stop using ketchup, they'll use some other kind of condiment that Kraft Heinz will then make. So I'd look into it. And it's just one of those staples that you want to have in your portfolio if you're not that risky, but you want it to grow slowly. My portfolio usually grows about 18% a year, which is really good for a pretty conservative investor because I buy the best dividend stocks at the best times. But if you're a complete knucklehead and don't know what you're doing, you're still going to gain 10% a year. That's just what happens. The governments do a lot to help corporations as far as the laws go, and although I don't agree with some of those decisions, it is good for stock investors, and I continue to see this grow. So do your own research, make sure you hit the like and subscribe button, and let's go.